Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Applied Optoelectronics.
If you find our talks useful, please consider subscribe, like, and comment underneath.
Right, so let's get right into it.
Yeah, let's set the stage for you today because everyone knows about the AI boom, right? We talk about it all the time. But if you want to know where the artificial intelligence revolution is actually bottlenecking right now, you really shouldn't be looking at the multi-million-dollar computer chips.
Exactly. You have to look at the microscopic lasers.
Right. Today, we're looking at the critical plumbing of the AI boom.
Yeah.
I mean, think of a modern AI data center like a brand new hyper-advanced metropolis, the graphics processing units, the GPUs everyone is constantly talking about.
The NVIDIAs of the world.
Exactly. Those are the brilliant skyscraper factories churning out AI models. But right now, those factories are basically surrounded by dirt roads.
That's a great way to put it.
Yeah, because the electrical signals traveling over standard copper wires, they simply cannot move the data fast enough. So Applied Optoelectronics, they aren't building the skyscrapers. They are laying down the high-speed fiber optic tracks to keep this whole train from derailing.
Yeah, the metropolis analogy is it's exactly right. Because think about it. If you have the fastest manufacturing plants in the world, but your transport network can only handle legacy speeds, what happens?
It all just jams up.
Exactly. Your entire system grinds to a halt. Those multi-million-dollar computing clusters just sit there. They're totally idle, just waiting for data to arrive.
Wow.
And this is where optical transceivers come in. Understanding how they work is, it's crucial to understanding this company's valuation right now.
So break that down for us. What exactly is a transceiver doing in this context?
Well, it's a remarkable piece of engineering. It essentially takes the electrical ones and zeros from the server, and it feeds them into a microscopic laser.
Okay.
And that laser flickers millions of times per second. It sends those pulses of light down a glass hair.
Like literally the fiber optic cable.
Right, exactly, the fiber optic cable. And then at the other end, a photodetector catches that light and turns it back into electricity.
That's wild. It's literally translating data into pure light.
It is, and what we are witnessing right now in the market is a fundamental sector-wide re-rating of the companies that provide this incredibly complex, mission-critical hardware.
Right, because to build those metaphorical bullet train stations for the AI supercycle, that requires immense capital.
Oh, absolutely.
You don't just stand up new manufacturing facilities on a hunch. You only do that if you have ironclad proof of demand.
Which perfectly explains the explosive financial metrics we're looking at today.
Yeah, let's talk about those numbers because they recently posted revenue of $455.7 million.
Which is huge.
It is. It shows a real tenacity for double-digit growth. But the top-line number isn't even the most compelling part to me.
No, it's the validation.
Right. The specific validation from the world's largest tech companies, the hyperscalers.
Yeah.
We are looking at an unprecedented $53 million volume order.
Right, specifically for 800G single-mode data center transceivers.
Let's unpack what that actually means, because I know the technical specifications are, directly tied to their competitive advantage.
They absolutely are. So 800G means 800 gigabits per second of data throughput.
Which is just staggering on its own.
It is. But the key term there is really single mode.
Right. So for the listener who isn't, an optical engineer, what is the practical difference between single mode and other transceivers?
So in short, it's about distance and signal integrity.
All right.
In a multi-mode fiber, the light pulses basically bounce around the walls of the cable as they travel.
Okay, sort of zigzagging.
Exactly, which is fine for very short distances, like connecting servers in the exact same rack.
Gotcha.
But single mode uses a highly focused, extremely precise laser beam. It's aimed straight down the absolute microscopic center of the fiber core.
So no bouncing.
Right, the light doesn't bounce. It travels in a perfectly straight line. And that means you can push an unimaginable amount of data across massive data center campuses without any signal distortion.
But I imagine manufacturing something that precise is...
Oh, it requires an exponentially higher level of microscopic precision.
Yeah.
It is incredibly hard to do at scale.
And clearly, Applied Optoelectronics has mastered that precision. Because following that $53 million order, they received a separate monumental order of over $200 million.
Yeah, for their next generation 1.6T transceivers.
Wait, 1.6 terabits?
Yes.
That is a generational leap in networking speed.
It is a massive generational leap, and physically it is incredibly difficult to achieve.
Why is that? Why is 1.6T so much harder?
It really comes down to thermal management and signal degradation. When you try to pack, double the data throughput into the same tiny pluggable metal module, it generates intense heat.
And lasers don't like heat, right?
No, lasers are incredibly sensitive to temperature changes. If the laser gets even slightly too hot, its wavelength actually shifts.
Oh, wow. Yeah, the light signal degrades and packets of data just drop. So solving that thermal dynamic while maintaining flawless signal integrity at 1.6 terabits per second is an engineering marvel.
It's not just theory anymore either.
No, these aren't speculative projections on a whiteboard. These are validated, bulky orders from companies that have tested the hardware and know it works.
Exactly. And the forward-looking estimates are staggering because of this. Projections point to their 2026 revenue crossing the $1 billion mark.
With the B, yeah.
Right, $1 billion, targeting a total addressable market of $60 billion by 2030.
The scale is just massive.
It is. But if you are looking at your portfolio right now, your immediate instinct as an investor is probably to look for the catch.
Of course. You always look for the catch.
Right. Whenever you see growth this explosive, you have to ask what it costs. And when I look at their Q1 2026 guidance, it signals some distinct margin compression.
Right, the margins are getting squeezed. Yeah. So, okay, let's unpack this. Is this margin squeeze a red flag for investors? Are they just sacrificing profitability to undercut competitors, or is there like a strategic reason for this growing pain?
It's a really vital question, and the answer lies in strategic capital expenditure. I mean, when you land over $250 million in next-generation orders, you can't assemble those in a garage.
Right, you need serious infrastructure.
You need serious automated manufacturing capacity. So the margin compression we are seeing is actually the company aggressively expanding its production lines.
Specifically in Texas and Taiwan, right?
Exactly, Texas and Taiwan. Their goal is to hit a prolific output of 500,000 units per month by the end of the year.
Wow, 500,000 units a month.
Yeah. This aggressive, capital-intensive build-out is precisely what creates their technological and supply chain moat.
Okay, I want to push back on that for a second, because I hear the word moat thrown around a lot.
Yeah.
Usually it's regarding software ecosystems or subscription models or brand loyalty.
Sure, the classic Warren Buffett moats.
Exactly. But this is physical hardware. So if the AI demand is truly this high, what is stopping a giant competitor with deeper pockets from simply reverse engineering their transceiver design, building a bigger factory, and stealing the market share?
It's a fair point. And honestly, the hardware itself can sometimes be replicated in a lab, but a true moat protects you from exactly that scenario. And in this space, their moat is vertical integration.
And interoperability, right?
Yes, vertical integration and interoperability. See, Applied Optoelectronics doesn't just assemble parts from third-party vendors. They design and manufacture their products from the ground up.
Starting from where, exactly?
Starting from the literal fabrication of the microscopic laser chips all the way to the complete turnkey equipment.
That's a huge advantage.
It is. By controlling the entire vertical process, their iteration cycles are vastly faster.
Meaning if a client needs a design change, they don't have to wait on a massive global supply chain.
Precisely. If an AI data center needs a tweak to the firmware of a 1.6T transceiver, they don't have to call 3 different overseas suppliers to coordinate a redesign. They do it entirely in-house.
Which ties directly into interoperability.
Exactly. Interoperability is the ultimate barrier to entry for deep-pocketed copycats.
Walk us through the mechanics of that. Why is interoperability such a nightmare for new competitors?
Imagine the inside of a hyperscaler's AI data center. You have switches, servers, and routers made by half a dozen different proprietary tech giants.
All trying to talk to each other.
Right. A transceiver has to plug into these diverse ecosystems and communicate flawlessly. If the custom firmware inside the transceiver doesn't seamlessly handshake with a specific network switch...
The whole network fails.
Exactly, the network fails. So a competitor might be able to build a 1.6T transceiver, sure. But getting it qualified...
Meaning proving to a tech giant that it works flawlessly at scale.
Exactly. Proving it works within their specific proprietary architecture. That takes an immense amount of engineering resources, testing, and time.
Because they have to tweak it over and over again.
Right. And because Applied Optoelectronics controls both the hardware and the firmware, they pass those grueling qualification tests much faster than their peers.
That makes total sense. And there is another layer to this moat that we definitely have to discuss, which is geography.
Yes, the geographical advantage is huge right now.
The domestic manufacturing footprint in Texas is proving to be a massive strategic advantage.
It really is. If we connect this to the broader macroeconomic picture, the major hyperscalers building these multi-billion-dollar AI clouds are, well, they're increasingly anxious about offshore geopolitical disruptions.
Right, because of tensions in the supply chain globally.
Absolutely. They absolutely cannot afford a scenario where a sudden supply chain shock halts their AI expansion. So having a robust, high-volume manufacturing facility right there in Texas,
It provides them with a critical strategic hedge.
it does. In many ways, these hyperscalers are buying supply security just as much as they are buying transceivers.
Which brings us perfectly to the stock chart, because the market has clearly recognized this combination of a vertically integrated moat, a geopolitical hedge, and an unprecedented order backlog.
Well, the market has absolutely taken notice.
The stock recently staged a violently sharp breakout. It skyrocketed 22.4% to hit a historic high of approximately $107.55.
Which is incredible momentum.
It is.
Yeah.
And the psychology of the market right now is what I find most fascinating. Because even when a brief 14.1% pullback occurred, dropping the price to roughly $109.10, the buyers just aggressively stepped in.
They didn't hesitate.
No, they immediately spiked the price 12.4% back up to $124.29.
What you are describing is the absolute definition of a structural buy-the-dip mentality.
Yeah, people are just waiting for a discount.
Exactly. That kind of relentless price action tells us that institutional money has completely re-rated the floor for this stock.
I mean, the big players aren't letting it fall.
Right. Whenever it dips, large funds see it as a temporary discount and they just absorb the available shares. Overall, we are looking at a stock that has surged over 180% in the last 3 months on extremely heavy volume.
And here's a detail that really stands out. Applied Optoelectronics is currently bucking the declines in the broader NASDAQ and S&P 500.
Yeah, that's crucial to point out.
When macroeconomic sentiment drags the broader tech sector down, this stock is ignoring the gravity. They are trading entirely on their own specific fundamentals. It's like they have detached from the macroeconomic tether entirely.
That decoupling from the broader indices is a classic hallmark of a fundamental regime change in how a company is valued.
Explain what you mean by regime change.
So for years, the market perceived them as a cyclical, commoditized hardware vendor. You know, if the economy slowed down, hardware orders slowed down.
Yeah. Standard cyclical behavior.
But now the trading algorithms and institutional funds are treating them as a mission-critical infrastructure partner.
That's a totally different valuation model.
It is. They aren't looking at the broader inflation numbers anymore. They're looking at a $250 million backlog of validated orders and realizing this company is somewhat insulated from standard macro headwinds for the next few quarters.
So with the stock up 180% and defying market gravity, it really forces us to ask, who exactly is driving this momentum? And what are the whispers behind these massive unnamed orders?
Yeah, because the quantitative sentiment right now is overwhelmingly bullish.
It's completely flipped.
Yeah.
You just mentioned they used to be viewed as a commoditized supplier. Now they are the darling of the optical supercycle.
The supercycle is real.
And you really cannot talk about this supercycle without bringing up NVIDIA's recent $4 billion strategic bet in the optical sector. That just validates how crucial this hardware is.
Absolutely. NVIDIA's multi-billion-dollar move into optical networking essentially sent a flare-up to the entire financial market.
Signaling that light-based data transfer is the future.
Yes, it is the undeniable future of AI scaling. That sector-wide rising tide has lifted the perception of all the key players, and we are seeing the analysts react accordingly.
Right, like Rosenblatt Securities.
Exactly. Rosenblatt Securities recently upgraded their price target for Applied Optoelectronics to $140, specifically citing the sheer momentum of these transceiver orders.
I also noticed there was some notable insider flow activity recently. Some director stock sales occurred.
Right, the internal selling.
Yeah, and usually when retail investors see insider selling, they panic. They assume the executives know something bad is coming. But the broader market completely absorbed this supply.
It shrugged it off.
Totally shrugged it off. It was viewed as standard internal reshuffling rather than a lack of confidence. The fact that the stock kept surging despite insider sales implies heavy, relentless institutional accumulation.
The big whales are hungry.
Yes, the big institutional whales are eating up whatever supply the insiders are letting go of.
That is a highly critical observation for any investor. Institutions simply do not accumulate shares blindly after a stock has already run up 180%.
Not unless they know something.
Right, not unless they have an incredibly high conviction about the future revenue pipeline. Which brings us to the speculative whispers on Wall Street right now.
Yes, here is where it gets really interesting. We've talked about these massive orders, the 53 million, the 200 million plus, but the company has not officially blasted the names of these specific customers across the headlines.
And they keep it very quiet.
They do. However, industry analysts are speculating heavily based on capital expenditure patterns. The whisper on the street is that the major hyperscaler behind these massive orders is Oracle.
Oracle, right.
And Microsoft is also expected to be a heavy contributor to the 2026 revenues.
And if those whispers are accurate, and the sheer scale of the volume orders strongly suggests they are, it is a monumental validation of their underlying technology.
Securing contracts with giants like Oracle or Microsoft.
It proves beyond a doubt that Applied Optoelectronics has a definitive edge in that interoperability and qualification speed we discussed earlier.
Because smaller peers just can't keep up.
Smaller peers simply cannot navigate Microsoft's rigorous testing architecture fast enough to land nine-figure volume orders.
Okay, so we've discussed the groundbreaking tech, the expanding moat, and the massive institutional buying. But what does this all mean for the risks?
There are always risks.
Right, because when expectations and speculative rumors push a stock up 180% in 3 months, the market is pricing the company for absolute perfection.
Priced for perfection is a dangerous place to be.
It's like walking a tightrope. The view from the top is spectacular, the momentum is thrilling, but you were suspended very high in the air. What happens if they stumble over the next 3 to 6 months?
That is the multi-million-dollar question every investor must ask, and the primary bear case centers around what we can call the 2026 execution deadline.
What does that entail?
Well, it is one thing to secure a $200 million order for cutting-edge 1.6T transceivers. It is an entirely different, highly complex operational beast to actually manufacture them at a volume of 500,000 units per month without a critical defect rate.
Break that down for us. What are the actual mechanics of scaling production that quickly? Why is it so risky?
It all comes down to manufacturing yields and quality control. When you are producing a few thousand units in a highly controlled environment, a 95% yield, meaning 95% of the products were flawless, is manageable.
5% waste is okay.
Exactly. But when you scale up to 500,000 units per month across new factory lines in Texas and Taiwan, maintaining that precision is brutally difficult.
Because the numbers get so big.
Yes. If your defect rate slips by even a few percentage points at that scale, you are suddenly throwing away tens of thousands of incredibly expensive, highly complex laser modules every single month.
Ouch.
Yeah. They must successfully ramp up this mass production, secure the raw materials, and solve any lingering firmware interoperability issues as they scale.
Because if they fail to hit those technical milestones and, say, ship a bad batch, what is the consequence?
In the best case scenario, severe margin collapse, because they would have to spend exponentially more capital to fix the defective runs and expedite new shipments.
And the worst case scenario?
Outright order cancellations from the hyperscalers. If a stock is priced for perfection, an execution failure of that magnitude would cause a brutal, immediate re-rating to the downside.
That's a huge cliff.
Yeah.
And beyond the execution on the factory floor, we also have to look at the broader valuation risks. You're up on that tightrope, and even if you don't stumble, a slight macro breeze could cause a sudden, violent wobble.
Oh, absolutely. Macro matters.
For example, we're currently seeing ongoing geopolitical tensions surrounding the Iran negotiations. If a macro shock triggers broad market fear, high volatility, high beta names like this are incredibly vulnerable.
Yes, they are.
And for you listening who manage your own portfolios, a high beta stock simply means an asset that swings much wider and faster than the general market. In a panic, these are usually the first names institutional investors take profit on to raise cash.
Exactly right. Even if the company's fundamentals remain absolutely pristine, broad market de-risking can drag the share price down simply because of its recent massive gains.
Funds just lock in their 180% profit.
Right, just to balance their books. That is why investors need to be laser-focused on the upcoming catalyst calendar. Over the next 3 months, the single most critical event will be the Q1 2026 earnings report.
So what specifically are we looking for in that report? Just general guidance or?
No. The market needs hard mathematical confirmation. Investors need to see that the revenue ramp from these new $53 million and $200 million orders is actually materializing on the balance sheet.
They want to see the money.
Exactly. That earnings call needs to confirm the execution timeline for the $1 billion full-year revenue narrative. If management hesitates or pushes the revenue recognition back a quarter, the stock will get punished.
Makes sense. We should also be watching the ripple effects from the recent Optical Fiber Communication Conference, OFC 2026.
Oh,
They
definitely.
just showcased their next generation AI data center supplies there. And for an investor, you want to look out for any follow-on customer feedback, partnerships, or new purchase orders stemming directly from that exposure.
Because the optical industry moves incredibly fast.
It does. Major networking conferences like OFC are usually where the next wave of bulky nine-figure orders gets initiated behind closed doors.
So if we synthesize all of this data, the raw technical requirements of the AI boom, the fundamental analysis of their revenue, their geopolitical manufacturing advantages, and the very real execution risks of scaling up, we arrive at our final investment thesis.
Let's hear it.
The bullish score for Applied Optoelectronics currently sits at a confident 8 out of 10.
An 8 out of 10. That is a very strong conviction score.
It is. The core thesis is that this company is a prime, tangible beneficiary of the AI infrastructure supercycle. They are not merely riding the software hype.
They have real physical assets.
Right. They are fortified by a domestic manufacturing moat in Texas and possess over $250 million in validated hyperscaler orders. The transition from 800G to 1.16 networking speeds is not a passing fad.
It's a hard physical requirement for AI scaling.
Exactly. And they're positioned right at the center of the bottleneck.
So for you listening, what is the actionable target horizon here?
We were looking at a swing to intermediate hold, meaning a strategic 3 to 6 month time frame. Because of the execution risks and macro sensitivities we just outlined, volatility will remain high.
So don't buy into the hype days.
Exactly. You do not want to chase the violent green days when the stock is surging. Instead, investors should look for strategic entry points during inevitable market pullbacks.
Any specific levels to watch?
Specifically, you should be targeting the $110 support level that was firmly established and defended during the March retest. That specific price level has shown aggressive institutional defense, making it a highly logical entry zone.
It really is a fascinating setup. You have the raw, theoretical, technological necessity of the artificial intelligence boom meeting the hard physical reality of laying fiber optic tracks.
The plumbing of the future.
Exactly. And it leaves you with a much broader question to ponder on your own today. We just spent this entire time dissecting how domestic manufacturing in places like Texas is quietly becoming the ultimate supply chain moat to win contracts from terrified tech giants. So as global trade complexities continue to evolve, how many other seemingly boring, commoditized hardware makers are quietly about to become critical, highly valued pieces of national tech infrastructure? Keep an eye on the plumbing. Until next time.